Welcome to the third and final section of Pitch Day at Bitcoin 2022. This is the infrastructure section. So companies building products at the center of Bitcoin infrastructure, mining, decentralized wallets, storage, to companies connecting kind of traditional piping and financial infrastructure, plugging into the Bitcoin network. So we're excited for this. We have 7 great companies presenting. To kind of kick off, I'd like to take it to the judges. Really exciting group of judges here. If you could just introduce yourself briefly and say hello to the audience. Let's start that way. First, Mr. Wonderful. We'll go stage left to right.
Thank you very much. Yes, I am Mr. Wonderful. I'm an investor. That's about it.
All right, good stuff. Ria.
Hi, I'm Ria from Castle Island Ventures. Castle Island is a firm that invests solely in public blockchain networks with a big focus on infrastructure. So very excited to be here today.
Great.
Tatiana Metodieva from Nexo, Head of Corporate Finance and Investments, leading Nexo Ventures, our in-house investment arm focused on Web3, infrastructure, DeFi, NFTs, Metaverse, and GameFi. Pleasure to be here together with you.
Thanks, Tatiana. Bobby.
Hello, I'm Bobby Lee. I've been in Bitcoins since 2011. I'm the founder and CEO of Ballet. We make cold storage wallets. Thank you.
Matt.
Hey, John. Matt Roszak, co-founder and chairman of Bloq, and we focus on 3 areas: infrastructure, DeFi, and Metaverse. So we're builders in this space. I also invest through Tally Capital since 2013, and proudly serve as chairman of the Chamber of Digital Commerce, the largest and first trade association in crypto. And I absolutely love this space. And I want to acknowledge Mr. Wonderful, because when he first came on the scene of crypto, he was a non-believer. And a year later, it is impressive to see your transformation going from a regular shark to now a crypto shark. So hats off to Mr. Wonderful.
Thank you. I would just say that the regulator changed their tone all around the world, so this is here to stay, and the policy coming this week by Senator Loomis is a big deal. So crypto is going to be the 12th sector of the economy one day, and I just need a piece of it. Just a small piece.
Love it. All right, let's kick things off. Crypto proof. If you could join me on stage. All right, thanks, guys.
Thanks so much. Hello, everyone. Thanks so much for coming. This is really an exciting opportunity for us to be here. Jacob and Aaron from Crypto Proof. And so far, we've met so many exciting companies, so many innovators in the space, and we're really honored to be included in this. So thanks very much. So, oh, my bad. You guys can see the screen, right? Okay, yeah. Perfect. Crypto Proof. We are bridging the verification gap between the crypto ecosystem and traditional finance. Now, in a lot of ways, our company and its mission is the story of myself and my co-founder here. I was a lawyer, commercial litigator for 7 years, and I used to represent financial institutions in complex commercial matters and regulatory investigations. Aaron comes from the world of engineering, formerly at Uber, and he's been a blockchain hacker since he was a teenager, so a lot of street cred over here. And we teamed up to solve some of the big challenges that traditional financial institutions are facing as they start to become more blockchain native and work with crypto assets and crypto customers. So as the story goes, one of Aaron's friends is a crypto millionaire, was looking for an apartment in Hell's Kitchen, and he was running into a lot of issues, proving his net worth, proving his assets and his available funds to the persons that he was working with. And we talked to a lot of people in the crypto community. I'm sure a lot of yourselves have run into this issue where you've started to, walked into a bank with your crypto wallet and they say, what can we know about you? What can we know about these assets that you're holding? And it's not always an easy conversation. So we started to really look at this as an infrastructure problem, something that needs to be solved with technology, and making it really easy for financial institutions to work with crypto assets and these customers.
And customers themselves working with financial institutions by bringing their crypto assets to the table.
Yeah, absolutely. So we boiled it down to a number of different problems that banks and financial institutions are facing. So right now, there's a lack of technology. There's really no easy way for a bank to KYC someone's crypto assets and onboard them as a customer. Once they have that customer, there's challenges with managing a regulatory compliant framework for working with these customers and assets. And of course, banks have struggled to develop online banking solutions, so naturally they're struggling to develop crypto native financial solutions. So we realized that another infrastructure layer was needed, something that can sit between the crypto ecosystem and the traditional financial world, where it's really easy to verify identity and verify assets, make it really easy for institutions to make decisions on those customers and manage their risk, and for them to tie in their banking core with all of the infrastructure that's currently being built and is still changing, growing, and being innovated in the crypto landscape. So this became our solution. We were going to solve customer onboarding for traditional finance. We were going to make it really easy to manage regulatory compliance. And we were going to help build the front end and build the integration so that these banks can and their customers can access the crypto marketplace. So with respect to onboarding, we built integrations into various exchanges and wallets and custodial accounts in the crypto ecosystem, so that with one click and a simple sign-in, customers can verify relevant details about themselves and the source of their funds, so that banks will feel comfortable working with these customers. And we're continuing to build out more integrations. Obviously, the space is continuing to grow, and there's a lot more space to cover. We're building the compliance framework so that someone within the bank, the internal team at the bank, can actually understand all of the potential risks they're facing with working with these assets, and make it really easy for them to create their own little walled garden within the crypto ecosystem, so that they can become more comfortable to grow and expand their offerings into the crypto space. And ultimately, what we're trying to do, what we're working with banks to do, is for us to help them build the front end, for us to help them access the crypto ecosystem and really tie crypto into their core banking infrastructure, so that they can become really do everything a bank wants to do, right? So that banks want to take customer deposits, they want to offer savings accounts like high yield accounts, and even lend against crypto, especially in commercial banking. That's becoming Bitcoin is the collateral of choice in a lot of respects. So we launched our product for this conference really to do two things. Anyone who has crypto assets that wants to get a CPA certified letter from one of our affiliated CPA entity can connect their accounts. We can validate your balances, so you can take that to a financial institution that you're working with, or even verify that you're an accredited investor based on your crypto assets, so you can invest in a Reg D 506C fund. And we're talking to a number of interesting market participants in the space, like even investment DAOs, that want to scale their offering in a regulatory compliant manner, so we would be doing the investor accreditation for them.
Yeah, and our investor accreditation includes verifying crypto assets. So we can verify wallet ownership through signing of private keys, and then also connection of different exchange accounts and such. So an investment DAO or a fund can literally send a user to us. We verify their identity using one of our partners, and then they literally onboard and verify any of their exchange accounts or wallets or their bank accounts even, and then we send it over to our partner accountant, who literally just needs to approve or reject, and then if it's approved, we send an accountant certified letter, all within all within 30 minutes potentially.
Mm-hmm. And ultimately, we see our verification technology and our compliance framework powering more market participation, more banks, more community banks, credit unions, new investment funds, new investment vehicles in the space that want to scale in a regulatory compliant manner, but just don't have the tools to power their business operations. So that's us, Crypto Proof. We verify crypto assets and make it really easy for financial companies to work with crypto.
Yeah, and we're at booth 651. If anyone wants to have a conversation,
please come visit.
We're working with funds, accounting offices, financial institutions, if you need to onboard and verify crypto assets.
Thank you.
So I'll kick off here. Where are you in the progression of the company? Do you have any customers, integrations with banks? Like, where are you specifically, pre-revenue?
It's a great question. We basically, the company was formed in June of 2021, and since then we've been really heads down building the technology. We came here to really meet customers and discover those opportunities. And today we really, fingers crossed, we have an opportunity to work with our first bank customer who's very interested in linking our sort of front-end neobanking, crypto-integrated neobanking solution and compliance framework into their core banking, solution. So it's kind of like a weird hybrid of banking as a service plus, where we would sort of be the plus.
Yeah, and you're hitting on a friction point that a lot of banks deal with every single day, trying to verify assets. What about those core banking systems? So the systems that banks use, that full suite. I forget the names of the companies.
Yeah, FIS, Fiserv, Jack Henry.
Those guys. Is that another kind of partner opportunity for you guys? Because banks are kind of blindly, acquiescing their tech stack to a lot of those entities. And have you gotten any discussions with them?
Yeah, it's funny you should mention that. So I'm not sure what I can disclose and what I can't disclose, but I know that a lot of those companies are talking to a specific wallet provider, and so we have had that conversation about a potential distribution channel through them. Ultimately, what would happen is, we would just be hooking into those sort of legacy core banking providers with, our solutions for money movement and also compliance on the back end.
Let me ask you a use case question, given in this year, people are going to have to report on a taxable basis all their wallets, whether they're centralized, decentralized. Does your platform allow you to get reporting on transactions that are audit ready? So if I have 3 MetaMask, decentralized wallets, and I've got 2 or 3 an FTX and a Coinbase, whatever, can you consolidate the tax reporting?
We can do whatever you want us to do. I'm just kidding. So it's funny because
is that part of the mandate you're building?
So it's really funny you should ask. Like since the beginning, we've been paying attention to sort of other market players, and the tax space is like pretty crowded, and I think also the payment space is pretty crowded. So I've just said we're not doing tax, we're not doing payments. When it comes to reporting, we can absolutely do that because it's a kind of a specific use case where someone wants, let's say, an attestation on their wallet. So we can connect you with our affiliated CPA entity or even your own accountant.
Your biggest challenge is customer acquisition, and you can solve a huge pain point for everybody, and there'll still be millions of people screwed over by this.
Yeah, it's funny because we've had a lot of accountants come up and tell us that they want to use our technology to service their customers. So we see that as a pretty exciting distribution channel where we don't need to acquire customers. We can work with these businesses and then, not exactly scraping bips, but you know what I'm saying.
Yeah.
Would you say one use case is to, do verification to leverage digital assets as collateral within a loan? And then if that is a use case, then, I think the next challenge is getting traditional financial institutions to accept digital assets as collateral. Is that something that you're facing, and kind of how are you addressing that?
So we've been talking about that use case for months now, even with a bank that wanted to do it. And I think there is an opportunity for us to kind of be the collateral agent because we've built the framework for onboarding crypto customers. So if we have a bank sponsor and we can act as the collateral agent, the kind of like white label solution is we can enter into a tri-party agreement with any bank. And now they're the lender, we're managing the collateral and building the front end for their customers. But there's definitely a lot of demand for that. I mean, you see it on the institutional level, and then there's a couple of retail offerings, but it's a pretty inefficient market where people are paying pretty high APR for over-collateralized loans. So I'm excited to disrupt that.
And what mechanisms are you going to use in order to increase switching costs, especially for financial institutions to switch to another provider?
Well, we don't want them to switch. No, we're going to try to hook into their existing legacy, banking provider.
And what is the long-term value added of the service? How do you see the future?
Well, I think what we're saying is if you build on our compliance stack, then there's so much you can do. Once you sort of nail, like the big question right now for a lot of banks, I know I'm running out of time, but right now they can work with a number of providers to buy and for their customers to buy and sell Bitcoin, but then how do you move Bitcoin in? How do you move Bitcoin out? Right? So if we can solve that, we can pull the thorn out of the lion's paw on that, then they're kind of wedded to us for the future of their crypto offerings.
Last question about NFTs versus traditional coins and tokens. What's your view on NFTs in terms of asset value?
It's a longer conversation, but I'm happy to chat with you after about that. Do you want me to give a quick
any
answer?
top line? Yeah. Any thoughts in terms of your company, Crypto Proof?
Well, I think we're looking at NFTs based on the Zapper, the Zapper integration.
We use Zapper.fi currently.
We use a floor price calculation. I mean, I think that there's a lot of. I love the idea of NFTs, and I want NFTs to really change the world. But I think that like the tokenization piece, like what is being tokenized, is really the critical factor there. So beyond the floor price calculation, I think we can maybe get into appraisals at some point in time, or use like expert valuations to opine on this, and that could become a part of our ecosystem. But right now it's like Sotheby's or someone else. I don't know who else can give you an opinion.
Thanks, guys. Good stuff.
Okay, thanks so much.
That was Crypto Proof. Thanks. Good job. All right. Next up, we have biofuel mining. Kicking things off. All right.
Thank you. Hello. Well, Wes Hamilton here from Biofuel Mining. I'm from Kentucky, if you can't tell from my accent. I have a unique thing of collecting puzzle pieces. And I've been an entrepreneur for 30 years, and being around other entrepreneurs and seeing the way things work and seeing other businesses, I've collected puzzle pieces. And when there's problems, you can file back inside your head and say, I've got a puzzle piece that'll fit that and fix that problem. So this is kind of how it all came to be, using green energy to power Bitcoin. I mean, how big of a problem is that right now? I mean, the way I look at it right now is it's just like the data center industry. They're buying credits to offset their carbon footprint, correct? So it's going to happen to us too. We're going to have to buy credits to offset our carbon footprint. But when you look at your competition, the people that are already buying credits, they're buying them for data centers that do hospitals, schools, banking. So how important is that to society to sell that renewable energy credit to that environment than it is to sell to a Bitcoin miner? So that was my problem I saw, and the puzzle piece that I came up with takes me back to my home state of Kentucky. And the reason I chose Kentucky is because all these puzzle pieces fit together. My father, my grandfather, uncles, they were all coal miners. I got to witness the infrastructure that was created. I saw the rise of the coal industry, and I saw the fall of it. So what was left after the fall of the coal industry? Huge amounts of infrastructure. I'm talking conductors, I'm talking transformers. We get calls every day, can you host 30 megawatts? Can you host 200 megawatts? Can you do this? Well, there's all kinds of people hosting across the US, and I'm not going to sit here and try to tell you that my crow's blacker than their crow. It's not a competition of who can do that the best, but what impacts the environment and helps the ESG around you to make the world a better place. And that's where biofuel, in my opinion, steps in with Eastern Kentucky. Where our plant is located currently, and I'll get into that in a minute, is one of the most poverty-stricken areas in the United States of America. We do not even have a sheriff's department for a period of time. That was on CNN. For a year, we did not have enough money to have a sheriff's department. I was at my father-in-law's about a month ago, and I got up early trying to take a shower, and they had turned the water off. And I asked my father, I said, what's going on? He said, they turned the water off at midnight, and they turned it back on at 6 because we can't afford to fix our water problems. Now, that's a huge problem. So I'm saying, how do we fix these problems? Do you just hand money to Eastern Kentucky? That's not the issue. You can pay somebody's house, but that does not create a home for that person. If I pay Mr. Wonderful's house payment for him, and he's not working for it, there's not a pride factor that he can hand it to his son one day. He can hand that house and say, I built this house. I paid for this house. Here's your deal. The depression of drugs in Eastern Kentucky, as you can see, There's constant articles that I read about how Eastern Kentucky's our drug problems worse than Oakland, California. The doctors, the pill mills, the Oxycontins. How do we get us out of that environment? Well, you got to create opportunities. You got to allow people to think differently. They don't want a handout. They want to be back to where my father, my grandfather, was making tons of money in an industry called coal. They built the Industrial Revolution. Henry Ford mined coal in Eastern Kentucky to build a Model T. That's how long ago it started. So when we look at that, there's never been a bigger opportunity now to change the way Bitcoin can now be mined in an opportunistic way that is, one, totally carbon zero, two, use garbage. What's another big problem we have right now in the U.S.? We have tons of garbage. What are we going to do with it? We're going to throw it in the ocean? No, that's bad. Why don't we gasify it, is what we do. And we turn that energy of gasification into electricity. And that's currently how we mine 7 megawatts. We have 7 megawatts currently going. And we're getting ready to phase up. The journey to economic sustainability, though, is not only about Bitcoin, but it's accessory businesses. Okay? The repair centers. Things that we want to have. The job creation in just hosting a Bitcoin farm, in my opinion, does not change the way that we can change economics, okay? The jobs that happens there is not as value or as many as you can if you do accessories, like repairing crypto mining equipment, like manufacturing pods, like distribution, like all the different accessories that we want to do. But when I look at this slide here, and I want to mention data centers, because when you try to compete against Google's, Amazon's of the world, you know, they buy credits to offset themselves. They use solar, they use wind. I don't know of any of them that uses garbage currently. I've done a lot of research on that. We could be the first data center in Eastern Kentucky that uses garbage for a university. Marshall University, the president of the chairman of the board, is talking to us about taking the garbage from the university, bringing it to our gasification plant, using their garbage to power their data center. Now think about that. Now they're getting rid of their garbage, and they save money on their data centers. Huge big deal. So that we're not just talking about Bitcoin mining is the thing here. So we're ready to create 200 plus jobs, and that's what our goal. We want to show how this new technology, free electricity, carbon zero electricity, can change the entire demographic of a society of poverty. And that's what our goals are. Phase 1, you can see a picture of our plant. You can also see some S9s that we're currently running. Gasification has been around for years and years. It's not it's not the science of the world, but I mean, it's been around. But what we did is we tweaked it to where we can control the carbon output. And that's our patent, the carbon zero creation. When we go to Jenkins, there we have 30 megawatts ready to go. And our second phase is to become scalable from what Inez Power is, or where we are in the Martin County area. Shovel-ready sites, so we're ready to go. So with that being said, you know, we got the buildings. That's a design of our building we're building in Jenkins. We already have the identical building in our other location where the plant is. We'll go through that slide. 100,000 mining machines. But, you know, and I could sit and tell you numbers all day long, but why is Kentucky important as a state? I'm on the state blockchain committee. I've got a non-member, I'm a non-member person of the blockchain, and we have passed numerous amounts of bills to help blockchain and crypto. But I know I'm running a little long, so I'll open it up to questions right now.
Could you expand on the patent and what exactly you're patenting and what's unique about your approach to gasification?
Yes, that's a good question. Our approach is none of our fuel that goes in and comes out goes to a landfill. We get rid of everything, and we do it at such a low temperature. We've got other information we can show you, but we're the only staple recycler in the world. So we can get rid of metals, or we get metals out of there that other people don't. We're not an incinerator. An incinerator quenches the end product, and 30% of that still goes to a landfill.
So how much emissions is your process creating in terms of carbon? Do you have to buy offsets as well?
Nope. We create credits.
But you're burning something to create power, right?
We don't have, it doesn't have a flame. Gasification, you starve it of, it's not like an incinerator. You don't burn to create that. Now, I know you're talking about the natural gas, the syngas, right, that hits it then. But as that is captured, our patented system, which I can get into that too, captures that extra carbon footprint.
I guess I'd ask the question a different way. The SEC is proposing that a company that claims to be carbon neutral should be audited.
They are.
And everybody knows that offsets are bullshit. It's not going to work.
No.
And so, maybe I shouldn't say bullshit. They have a large they have a large error in terms of so that's not going to work. And I'm just wondering if you're going to be subject to that audit.
We have been audited. The state of Kentucky audits us. When we have to report weekly on our emissions. We had to put emission sensors in our stack. And the first week that we ran it, the guy at the state level.
You don't think that's, so I'll believe you when you say that.
Yeah.
How much, like what are you producing power at? How many cents a kilowatt hour if you're going to be competitive?
We get free electricity because we get paid to take garbage. Our tipping fees is, which I don't care to tell you, it's almost $1 million a month to receive that much garbage. And then the byproduct's electricity. So we get basically no cost electricity.
How many megawatts can you, in the next 2 years, can you build out?
200. How much trash can you get me?
So that's really the factor, right? How much?
Yeah, your fuel stock. And that's why Kentucky's so beautiful, because the state has given us a permit to receive garbage from all 48 states. We're the only state, Kentucky's the largest importer of trash of any other state in the United States of America. So we already have those permits. We've already established it. You couldn't take this and sit it in Chicago and run this thing because of permitting issues, it wouldn't let you do it. In Kentucky, I'm sitting on 60,000 acres of nothing. I mean, my RV that I live in got attacked by a bear the other night. So, I mean, that's no joke. It woke me up trying to get in on me. I don't know what it was wanting, but me or the food.
How are you accessing stacks? Where are you getting machines from? Or you're just letting miners come in? You're selling them the power, basically.
Well, that's a great question. We just established a relationship with a great partner of ours. His name's Jerry Tang. He's with VCV Digital. He has an enormous amount of equipment already that he can deploy at our locations. And he is really good at the deployment of getting us equipment, making sure the budgets are taken care of, all that back of office. He's already proven this. VCV Digital is a huge, and their back of office is second to none. I'm not that good at that kind of thing, but what I am good at is solving problems that exist and creating jobs and doing it in an environmentally safe way is what.
And how much capital are you trying to raise to build out 300 megawatts?
I don't know if I really want I don't want capital. What I want you guys to do is send me equipment. If you know a dean at a university, I want them to call me and say, we want to send you our trash. Because there's a huge logistics.
You mean equipment, you want Bitcoin miners or you want trash?
Anything that helps my business. I got to have trash.
Well,
so,
here, just so I clarify this, so there's the workflow here. You got unlimited amount of trash. And then you have a lot of miners that want green energy, which you produce.
Yep.
And the middle part, this gasification piece, that's the tech that you're translating that to miners to use and be very green.
Absolutely.
Is that gasification technology yours proprietary, or there
Yes.
I don't know that much about trash. Are there other gasification plants all over the U.S.?
There is some other competitors out there. I mean, I'll go ahead and tell you, there's one called Covanta. They're publicly traded. They do some things like this. But I feel like that our environment that we produce is a more ESG friendly because, we're trying to not only create jobs with the Bitcoin part of it, but we're also trying to create jobs with the repair center, the data center, the agri-tech that we're trying to use. We sit on top of 1.9 million acres of abandoned mines that we're going to pump that heat from our mining operation to do agri-tech inside of abandoned mines. Mycelium being a big part of it.
Are you also trying to procure the mining hardware? And could you talk a little bit about your ability to actually procure the hardware?
That is why, again, puzzle piece, I'm not good at that. Jerry Tang and his group, BCB, that's what they do. They buy, sell equipment. He has access to as much equipment as we want to get.
And you have a formal relationship?
Oh,
there?
yeah. He owns 50% of our company.
All right. Thank you.
Thank you.
Good stuff. Learned a lot about trash there. I love that it's a competitive advantage to be in Kentucky because they're the biggest importer of trash in the country, and that's a good thing. So that's pretty fun. All right, thanks, guys. Next up, we have Nunchuk. If you could join me out on stage.
All right.
Fun company name, fun company. I'll hand it off to you.
Thank you. All right. Wow, it's bright. Can you guys hear us? Can you guys see us? Okay. For the record, I'm standing. All right. So my name is Darren, and here's my designer, our designer Tom. We are excited to represent Team Nunchuk today. And before we tell you our product and our story, let me tell you this story first. So any of you guys know about the Freedom Convoy in Canada? Oh yeah, there's a few people do know. Kevin must know. So for those who don't know, the Freedom Convoy was a peaceful protest in Canada by the truckers. And they protest against some of the pandemic restriction, which the people in Florida said, oh, what restriction? The Canadian government reacted by invoking the Emergency Act to freeze all the funds to the protest. And of course, the donors are going to turn to Bitcoin for donation to the protesters. And they are looking at all the solutions on the market. Nunchuk was the only solution that helped the protester, the organizer of the protest, to get the donation, to discuss among themselves, to distribute the fund to the protester. So we were that solution for them to use. And using the Nunchuk multi-sig wallet, they was able to discuss privately and then distribute the fund to the protester. It was such a fun and proud moment for our team. All right, and then before we go into more detail, let me set the stage a bit. So this chart summarizes all the different wallets for Bitcoin self-custody. If you are the only owner of the wallet, and your wallet has only one key, it's a single sig wallet. It's a bit scary, because if you lose the key, you're going to lose the fund. If you have multiple wallets, it's a multi-sig wallet. It's a bit better in terms of keys, but then the owner, you, could be the single point of failure. Now, if you have multiple people, multiple owners managing the wallet, it's a collaborative multi-sig. And we strongly believe that the future of Bitcoin custody will be for multi-sig or collaborative multi-sig wallet. With that in mind, let's talk about the problem with Bitcoin custody nowadays. The first problem, digital key management is hard. It's extremely hard. You have to think about all the seed phrase. You have to figure out where to store the keys. Not too easy for the hacker to get to it, but not too hard to find that even you cannot find it. And then you have to think about a lot of things and think about what is at stake here. It could be a lot of money in the fund or even your life saving. So we do believe that the digital key management pain point is the reason why a lot of people do not take self-custody of their Bitcoin, or they may not ever adopt Bitcoin in general. Now, the first problem is easy to understand because everyone deals with that problem. But the second problem is about when more institutions begin to adopt Bitcoin, they see obviously the need for multi-sig collaborative wallet. Because there's no way that one person is reliable enough to manage the entire fund for the entire organization. It's just too much risk, too much liability. But then when we talk with our customers, they all say that signing the transaction is just only a small part of the issue. 90%, more than 90% of the time is spent to coordinate among themselves to decide where to spend, when to spend, how to coordinate the signature of all the wallet owners. Unfortunately, there is no solution on the market. There are only a few solutions on the market for multi-sig right now, but none of them actually offer a private coordination way for the owner to coordinate in that collaborative wallet. And for a few of them actually do have it. They actually, the operation is extremely cumbersome. Like someone needs to initiate the transaction, and then they send it via email, and then someone needs to sign it and send it back. So beyond just the cumbersome, that way of operation could pose a lot of risk and privacy issues. But we do have a solution, and Tom will tell you more about it.
Thank you, Darren. So in order to address the key management issues, Nunchuk provide the most comprehensive key management solution there is. First, user can manage all types of key within the app, be it software key or hardware key. Second, we are the only solution that provide both desktop and mobile. This enables user to manage and sync their key across multiple devices. And third, we focus on the user experience. Our app is so easy to use that the Bitcoin beginner can use it. And second, in order to address the private coordination issues, we built an encrypted messenger within our app. This encrypted messenger allows user to create collaborative wallet, coordinate spending, and sign transaction within one screen. Now, let's see the product in demo. In this demo, you see that our team, a globally distributed team, is planning for vacation. In no time, we were on our way to beautiful Chiang Mai. Now, let's take a look at some metrics. I want to call out specifically the middle number here, as that has clearly proven that we have clear demand from our user to use our app to manage their Bitcoin. And this is all gained since the December of last year. And the amazing thing is, we achieved all of this 100% organically. 0 marketing dollar was spent. On top of good metric, we also received amazing feedback from our user as well as the Bitcoin community. Shout out to Lao Lu, the CTO of Lightning Labs. I actually have this tweet framed in my bedroom.
Awesome. Laulu is probably doing the keynote speaker on the other stage. But stay here with us. We are more fun. So the traction actually proves that there is the need on the market for users when they want to hold Bitcoin long term or when organizations adopt Bitcoin. And Nunchuk make it so easy for users to adopt multi-sig and collaborative wallet. Because as you can see, our product is significantly better than any solutions out there. And as in the demo, you can see like our 15 people with the 7 signatures to spend, and everything could be done in one screen. Now let's talk a bit about the market. So we are here, we are all here because we are bullish about Bitcoin. Like there's even a bull right outside of the building. And we have seen that Bitcoin has been growing leap and bound in the last few years, both in terms of the market cap and in terms of adoption, especially the institutions, especially the investment funds. More and more organizations begin to adopt more and more Bitcoin. No doubt that this growth requires the next generation of custody solution, the one that Nunchuk provides. And even with all the limitations right now, on-chain data show that about 15 to 20% of total Bitcoin supply out there actually being currently held in some form of multi-sig wallet. And this is the market for us to disrupt. Towards that end, so in order to capture that huge potential market, our go-to-market priorities are clear. First and foremost, we continue to provide the value to customers, continue to drive more growth, invite more people to use our product, and provide them the best possible experience as possible. Collaborative custody has the network effect, and the more people use our product, the more valuable, exponentially more valuable Nunchuk will be. We have a few paths to monetization, and we actually have really exciting roadmap to take us there. We are looking for like-minded investors and partners in order to partner with us in this journey. All right, and about to run out of time, but if I only have a few more seconds, one more thing. So let me close up this presentation with the end of the story about Freedom Convoy that I said before. So what happened? The Ottawa Supreme Court sent us an order and said, hey guys, you guys need to freeze the fund that's stored in Bitcoin wallet, from Nunchuk Bitcoin wallet. So we wrote them a response, and I would love to read part of that response to you guys today. But because Tom and I have been talking a bit too much, so we have a guy with like deep, dramatic voice, deep sound accent to read the response to you guys. So regardless of you guys like him or not, we only use him for the voice, okay? And here it is.
It's my voice.
Sure.
We do not collect any user identification information beyond email addresses. We also do not hold any keys. Therefore, we cannot freeze our users' accounts.
I was waiting for the applause too.
We cannot prevent them from being moved. We do not have the knowledge of, quote, the existence, nature, value, and location of our users' assets. This is by design.
And that is Bitcoin self-custody. That's in Nunchuk. Thank you. All right, and we have free shirts, so come talk to us, and then we'll be at the corner. That corner, not the corner on the street, but we'll be there. All right, with that, we would open for any Q&A.
Great job on the presentation, and I'd love a t-shirt, by the way. Single question, how do you make money? What's the monetization model? That's always the challenge in the wallet space, because you have a ton of utility here.
So they actually, companies, for example, Casa or on-chain already proved that customers are willing to pay for the wallet management if they actually can help them to solve some of the pain points. And think about all the money that they actually store. So that value is definitely there. And that Bitcoin key management or self-custody is one way for us to monetize. But in my old slide here, we actually think of a few ways. And the freemium model, we continue to provide value to customer first, and that's what we want to capture that network effect first. And then from there, we can think among all those value, there's a few ways that we can provide extra service on top for the customer to get some of that value. There are things like, for example, the platform as a service. The self-custody is only the first use case that we addressed, but given that our architecture is very open and we actually can integrate with all the platforms, for example, like Casa, Unchain, Fidelity, if the customers actually want their key to be managed by a third party, Nunchuk actually can provide the platform for customer and all the third party to do that. And we actually have even more thinking. So if you are interested, come get a free shirt later.
Yeah. How does the recovery mechanism work, and what is your competitive edge in general?
So the first part is how the
recovery mechanism work.
The recovery mechanism. So right now, multi-sig by itself, collaborative wallet by itself is already the way for people to remove the single point of failure. So if like you, me, and a few people actually manage a wallet, if I lose a key, we just move to a new wallet because our 5 keys, for example, we only need 3 keys to move the fund. Then if you lose the key, it will not be the end of the world. So that is how you recover. Right now, we leave that power to our user. Non-KYC, nothing. We let the user to decide how they manage their wallet. But of course, if they need help, eventually, that is the place where we can answer the question here, where we can provide that extra service and get some of the revenue back.
Where are you Nexus? Where's your company registered?
Not in Canada.
Okay, but where?
So we register, right now we register in US, but at the same time we have a few subsidiaries in other places in the world. So one of which is in Asia, because that's also the market that we are thinking. Asia is the next place where a lot of Bitcoin custody will happen.
But where's the corporate headquarters? Where do you report your taxes to?
US right now.
Okay, so you're a Delaware company?
Yes.
Okay, and did you get any retaliation from the Canadian government?
Don't give them an idea, not yet, but not yet. I don't think so. We actually say the truth. It's not something to retaliate. Actually, a lawyer actually look at our response as well. We just say the truth. We provide the software to keep the Bitcoin. It is self-custody. There's nothing we could do.
No, it's a hell of a story. It's very interesting.
Thank you.
Does Nunchuk participate in the multi-sig in any way? Does it hold any backup keys?
No.
No.
So for the multi-sig, collaborative multi-sig, how do you prevent the other players from stealing the funds from the owner? Can the other collaborative players gang up and steal the funds from the owner?
So that's the design. That's the design of multi-sig, right? When you actually sign up for the multi-sig wallet, you actually need to agree with your trusted partner, like me and my sister and my friend Tom. I don't know if I trust him, but sure. To create a wallet, and you need to agree to that wallet, to agree for the wallet to be established. If in that partnership, the majority actually decide to move the fund, I mean, that's a different issue. But using multi-sig, losing the key will not be an issue.
But is there an audit trail of which partner moved what and when?
Which partner moved what and when. So everything will be happening. So everything will happen on that chat room that you saw in the demo. So we will see like, a transaction being initiated.
But if a partner goes rogue, is there an audit trail that says they moved the Bitcoin out?
Yes. So we will know like which in that wallet, you will know how the fund is moved and which signature was used.
Because in an enterprise, they're going to want to see, as you suggested in the beginning, this would be useful for enterprise, and
Yes.
I agree. But if you're accredited to move funds, I'm assuming you can't put a limit on this yet, so it's all the funds could be moved by one of the partners. I'm thinking about how real banking works today. You can put limits on which people are allowed to move what from what accounts.
Perfect question. So we actually have 2 features that we are developing. One of which is when we think about enterprise readiness, the audit is a must. So we're gonna have the ability for the audit of like what's happening in the wallet. And when you think about it, like the Freedom Convoy story, for example, there are millions of donations and millions in and out. And the 5 organizers got to be able to know who is moving the fund where, and how the fund received, how the fund being transferred out, right? So that is the first one. And the second, the second part of your question, the second part of your question about
Limiting the amount.
limit amount. Right now, we actually have a feature that you can decide a key is only a backup key. Meaning, out of the 5 keys, you are designated as a backup key only. So you don't have access to that key unless the wallet lost the key and you are used as a backup key. So we actually decide when the key.
That's not running yet, right? That's coming?
It's actually already in beta. So you actually can make the designation, like this key gonna be a backup key. So you just sit there, you will not be able to see what is going on in the fund. You are only needed when the key is lost and your key is needed to recover the wallet. No, not recover the wallet, but moving the wallet to the fund. All right. Oh. All right. Any more questions? We are out of time.
That was great. Thank you, guys.
Thank you so much.
Thank you.
Thank you, guys.
Thank you.
Free T-shirt.
Hey, sticking up behind you, it's a good test of the startup founder there. Good way to pass. You know, we took applications for Pitch Day this year over a, say, 6-7 month period. And so, which is kind of a long time in this industry, actually. So, some of the first people to apply that we saw come in, we then saw them, raise large funding rounds or, be in the news somehow. I think Nunchuk was the only one that went viral for being involved in an international incident. So it was fun to have them, fun to see that and then have them pitch today. Next up, we have Moon Mortgage. If y'all could join me up here. All right.
Thank you.
Thanks.
Bye. Hey, everybody. Thanks for coming out. My name is Aaron Nevin. I'm one of the founders of Moon Mortgage.
My name is Tristan Marino. I'm also a founder.
And we're launching a crypto-backed mortgage product. To give you a quick background on us, I worked in real estate development for about 5 or 6 years in Boston. After that, got bit by the crypto bug, moved to New York, started a crypto asset repo exchange, helping banks enter the space. Closed that down in 2017, joined an incubator program called Antler. That's where I met Tristan. At the time, I was building out a company called Use Kitch, Airbnb of commercial kitchens. Sold that, and then had to figure out what to do with my life.
I'm Tristan Marino, and I started with a background in real estate, did that for a little while, and pivoted into a more entrepreneurial angle. I went into the same startup incubator where I met Aaron, Antler. I was working on an insurtech product focused around personal property at the time, and then it turned into this venture we are today.
Yeah. Quick overview, we're working with a couple of big players in the mortgage space. Alan Garino, old school finance guy, deep MBS experience, and Anthony Balbo. Works as a bridge lender, a lot of experience in the distressed asset space. So this story is ultimately about me, and a big problem I had when I was in the process of selling my last company. I needed to figure out what to do next, and I thought long and hard about moving into my traditional real estate and investing background. So I went into to banks, and I said to them, I have all of this shiny cryptocurrency. Is there anything I can do with it? I'd love to leverage this to get back into some real estate. I've been a founder most of my life, have a pretty embarrassing W-2 for the last couple of years. And so they kindly escorted me off of the premises. I went to DeFi looking for a lending option that made sense for investing in real estate. Nothing really worked. You had high collateralization requirements, you had short terms, and you had really high interest rates, north of 12%. Nothing that really made sense for investing in real estate. So I basically started complaining about this to my buddy Tristan, who had some of those similar problems. And we decided to try to tackle the problem. With our background in real estate and finance, we realized we have a lot of value we can add to the space, and ultimately could solve some problems for myself and some of our other OGs in the area. So there are two main problems we were trying to tackle. First and foremost, Most crypto investors, they're not bank friendly. They could sell their crypto assets, but then they'd be dealing with this slew of taxable consequences, and they wouldn't be a holder anymore. I wasn't a big fan of being called the paper-handed punk, and I decided we needed to do something a little bit different.
So how the product actually works. Let's just say you want to buy $1 million property in Miami. You will post $1 million in the cryptocurrency of your choice that's authorized by us, let's say $1 million in Bitcoin. And your only real risk is your liquidation risk. So if your asset drops 80% from that $1 million to $200,000, it gets liquidated into cash to solidify a 20% equity buffer in the property, which makes this product somewhat appetizing in a traditional secondary mortgage market. And we don't tap any of your upside. Your upside's completely up to you. And it's really a way for you to leverage your asset and also have the upside in real estate, crypto, and some of the security of a real asset as well.
Yeah. So we make money a couple of ways. We like to think of ourselves as a super sexy fintech, but we're really just a lending company that does origination. So we make money on the upfront points, the origination costs. We make money reselling the loan. We rehypothecate this asset through one of our preferred custodial lenders, all through over-collateralized loans. So we'll make 2 to 10% on the underlying asset, depending on what that is. And then some liquidation and margin fees. We allow you to top off your account if the assets go above 100 and, in the example, if they go above 150%, you get a scrape off 25%. And we really built this to be crypto native, work with all of the borrowers who have been in the space for a long time, meet them where they need to be met. As we had said, we want to buy $1 million property. You put up $1 million worth of Bitcoin. We take a first position lien against the property itself, and then we have a securitized interest in the crypto assets. We're essentially 200% collateralized. The cool thing about this is it allows us to have some really wild underwriting criteria, right? So even if you don't have a W-2, and you don't have traditional sources of income, we can clear you for owner-occupied loans. We can clear you for investment loans. Your interest rate may vary, but we can ultimately lend to almost anybody who has enough assets. The thing is, we're not really reinventing the wheel here. There have been products that do this type of lending before. It's just we're bringing it to the crypto space.
So a little bit on market size. There's over 100,000 Bitcoin wallets with over $1 million in it, excluding exchanges. There's over 20,000 Ethereum wallets with over $1 million, excluding exchanges as well. So the total market is around 1.2 trillion. So even if we capture 1% of the market, it's still around 12 billion. And this is a very lucrative form of lending since it's so asset rich.
Yep. To give a little background on that, basically we make $5K a month on rehypothecated assets for every million in AUM we have. And that doesn't include origination fees, closing costs, margin, all the other places you can kind of pad fees into the space. Anyways, we're big Q&A fans. This is kind of a funky product, and figured we'd just save some time and go straight into that. But if you're interested, you can sign up for our waitlist at moonmortgage.io. And we'd love to help you buy your house.
Coming to a state near you.
Is this loan regulated state by state?
Yeah, so we're launching in Florida, Texas, and Puerto Rico. There's no commercial lending license, so we can do investment properties right now, and we have our licenses pending to do owner-occupied in all of those areas.
And would I be right to say there's nothing proprietary? Once you get licensed, then it becomes customer acquisition cost, and margins get squeezed over time. Is that what happens?
Margins don't really get squeezed. I mean, you're going up against prime rates and then rehypothecation. There's not a lot of room to squeeze. Like, this isn't the type of product where there's a race to the bottom.
What stops Rocket from doing this and crushing you like the cockroaches you are? What happens?
They could if they want to play in the crypto space, but there's also the servicing component to it. There's a lot to build out and a lot to test, but they could.
And how are the LTVs determined?
So we take 100% crypto collateral. So from just about any asset that has over $1 billion in daily liquidity, we can consider that asset. So you want to buy $1 million condo, you put up $1 million in Bitcoin, Ether, we'll take a blend of assets, we'll move into NFTs as well for certain ones, and then we can lend against that.
Who's providing the capital to be lent out? Are you working with institutional lenders?
Yeah. We're working with hedge funds and banks to provide warehouse lines.
Okay.
What's a bottleneck for your business model? Like, what are you guys waiting on?
Waiting for licenses to come through. But yeah, when you're dealing with 200% collateralization, right, it's a really safe product. There are going to be people who want to put money on that. And then the interesting piece, we're building a secondary market to resell all of this debt. So we're not actually keeping any of it on our books. We maintain servicing rights, which gives us the ability to rehypothecate those assets and make money on servicing. It's kind of part of our niche. The servicing piece is hard. No one wants to actually do that. So by building out a fairly robust servicing department, even if Rocket or some other players got in, we can move more heavily into the servicing side.
One of the components to that as well that we find interesting is the people that look for fixed income products, that they're usually not the people that are crypto native or interested in cryptocurrency in any way. So we're really trying to make it very simple for them to just get a check in the mail for their coupon rate and have it very simple while they have a little bit of crypto exposure on the underlying, but make a very streamlined product for them as well.
Yeah, and for the earlier you gave the example of if crypto were to crash, what was that 20%, 80% crash situation?
Yeah, so
for
if
the owner, yeah.
If your $1 million in Bitcoin becomes worth 200K, it gets liquidated to stable coins. It doesn't get applied to the balance. We still maintain it as a stable coin and can continue to rehypothecate that. We actually make more money lending out stable coins than we do Bitcoin or ETH.
And also, if you post more collateral, it's not an issue. You don't get liquidated just like a stock loan or any other kind of similar loan.
Bring your mic down here.
Yeah, and how do you monitor the LTV ratio?
So our custodial partner does pretty much all that for us. So we, the way we have our control agreement set up, it allows us a lot of flexibility, but there's basically a tech solution to it.
They're a federally chartered bank, so they have some of the highest regulatory scrutiny that exists, and they take care of a lot of the selling and buying and trading, and then we're just the front end and making it very consumer focused and doing the underwriting and things of that nature.
What do you think the distribution will be between commercial and residential? Because I think the commercial stuff for large wallet holders could be very interesting as well.
Yeah, so the cool thing about this product is that I have a really bad expression, so pardon it, but this product lets you have your cake, eat it too, and then kind of live in your cake. So you get to double leverage your crypto at no real additional risk and move into alternative assets like real estate.
However, there's custodial risk, right? So if I post up $1 million worth of crypto, what's my risk of not getting that back in whatever year 2020?
So, there's always counterparty risk in any kind of lending scenario, most likely. Like BloqFi, Celsius, they all have similar kinds of risk, but our custodian only lends out to accredited investors on a collateralized basis. So that's why some of the yield can be quite low on certain assets, but they always have collateral to chase in case of incidents like that.
So who is your custodian? Do you talk about that?
We can't say yet. We're finalizing our agreements currently.
But you know them. Cool.
Any other questions?
All right. Thanks, guys. Good stuff.
Thank you.
Thanks. Good mortgage. All right, up next, we have Guardrail Mining. Yeah. One fan in the crowd here. All right.
Thank you. Good afternoon. Can everyone here in the back hear me okay? All right, great. First, thank you very much for this opportunity. We are really excited to be here. My name is Paul Morris. This is Brett Garman, and we're the co-founders of Guardrail Mining. We operate a repair center for Bitcoin miners. We have a team of 75 trained contractors who deploy across multiple sites supporting institutional Bitcoin miners. All right. We also offer technical consulting, site selection, and audit services. Brett is holding an ASIC miner. ASIC stands for Application-Specific Integrated Circuit. That means that these chips have been customized for a very specific purpose, in this case, Bitcoin mining. This is manufactured by Bitmain, the global leader, and this model is the Antminer S9. So last spring, the China mining ban forced over 2 million of these ASIC miners offline, all within a very short period of time, less than 2 months. 1 million were shipped here to North America, and they quickly absorbed all available hosting capacity. And right now, there's an additional 300,000 brand new ASIC miners that were produced last year, and 1 million more have been pre-ordered for delivery through next year. Industry problems. There is a lack of quality hosting facilities for these ASIC miners. Demand is so strong that customers are getting kicked out at the end of their 12-month hosting agreement. They are so desperate to get their miners back online that many are working with second-tier facilities that are often poorly designed and run by inexperienced operators. And they're overloading the power circuits, blowing up transformers, and destroying customer equipment. And so what Brett and I have learned with our customers is it takes at least 2 years to build these large-scale Bitcoin mining farms. And right now, there's a massive rush to build out all this infrastructure. So at Guardrail Mining, we believe these mega mines introduce unnecessary risk. So we have our own solution. We are mapping out a network of scalable operations that are both geographically distributed and diversified across different energy resources. So we're using our experience to mitigate risk and taking back control of the power costs and the hosting capacity. Let's talk about the market. Bitcoin miners earned over $15 billion last year. That's more than they made in the 3 previous years combined. Now let's look at the market leaders. Marathon is scaling up their miner fleet to 200,000 ASICs. Compute North, the hosting provider, they're adding at least another gigawatt of hosting capacity. That's enough for another hundreds of thousands of ASIC miners. And many of you know that Riot Blockchain acquired Windstone last year, the world's largest Bitcoin mining farm, and they're expanding capacity from 300 megawatts to 750 megawatts. So the entire industry is scaling up, but it's still going to take many years until many of these ASIC miners find a home. So the energy industry is also paying attention, and global leaders are placing bets on the potential for Bitcoin mining to transform the economics of the energy industry. Gas flaring is part of the oil extraction process, and when there's no pipeline infrastructure available, this unused natural gas is just burned off. So ConocoPhillips and ExxonMobil are running pilot programs right now. They're taking this unwanted gas and diverting it to power on-site Bitcoin mining operations. And these pilot programs have been so successful that they're now expanding globally. So Bitcoin mining is actually helping to reduce emissions. Why now? Well, the entire industry is scaling up for the next Bitcoin halving event in spring 2024. So what happens is, during this 4-year cycle, the block reward is cut in half. And Bitcoin miners with a high cost structure are no longer profitable, and many will go out of business. This creates opportunities for those Bitcoin miners with a very low cost structure. So what we've seen historically is there's typically a very, very volatile period during this era, but about 12 to 18 months after the Bitcoin halving event, there's a surge in price to a new all-time high. So Brett started self-mining back in 2017, and with the obvious need to repair his own ASIC miners, he trained and became Bitmain certified. Today, he teaches those courses on advanced chip-level repair as a Bitmain partner and the lead instructor at the Antminer Maintenance Training Center. And having over 10 years of having experience of working at over 10 institutional Bitcoin mining farms, along with Brett and our team, have acquired an incredible amount of industry expertise and experience. And as I mentioned in the introduction, we have a pool of talented contractors who are deployed across multiple sites for our institutional Bitcoin mining customers. We recently expanded our operations and opened up an ASIC repair center, and our objective now is to continue to expand and go into self-mining for our own, because we believe we can do it much more efficient and lower the risk. So we worked across a number of different projects. We know what works, what doesn't work. We have the manpower for speed to market. We also have the access and the ability to acquire and fix broken ASIC miners. This lowers our CapEx as we can acquire discounted hardware in the secondary market. It also enables higher uptime across our entire miner fleet, as we can immediately fix these miners instead of waiting 3 months to send it to the warranty center and get it back. So Brett and I first discovered Bitcoin about 7 to 8 years ago. He began self-mining in 2017, starting from very humble beginnings with 2 ASIC miners in his garage. He scaled up to over 300 ASICs and operated his own mining farm until 2020. Concurrently, he was working for some of the world's largest Bitcoin mining companies. Many of them are now publicly traded. Again, he's a Bitmain partner and a certified instructor, and Brett started his career in air traffic control with the United States Air Force. I started my career building top-tier data centers for investment banks, hedge funds, and financial exchanges. I've also helped scale a number of startups internationally, I brokered the first 2 real estate transactions on the blockchain in Asia, and I studied computer engineering at Vanderbilt University. Guardrail Mining is a veteran-owned and operated company. In addition to Brett, half our team represents all major branches of the armed services. That's right. Thank you. So we're now building out our own self-mining operation, and we've been established relationships with a wide range of energy providers that can offer power rates at or below the 4 cents range. That enables us to mine our own Bitcoin at 50 to 60% below spot market price. Last year, our ASIC repairs, our on-site deployment teams, and our consulting services earned over $1 million. We see about 4x growth in line with the industry over the next several years. This is just our existing business. We believe our self-mining operation will generate at least 90% of our revenue going forward. So we're raising a $5 million Series seed round, and we're offering 10% of our operating company and 10% of the Bitcoin yield on our balance sheet. This investment will go towards infrastructure ASIC miners, along with the power agreements and the working capital. And we believe that we can self-mine Bitcoin more efficiently and with less risk than anyone else. And we're looking for investors who are just as passionate as we are about building decentralized infrastructure and securing the Bitcoin network. So we look forward to speaking with any investors who are interested in learning more about this opportunity. And you can contact me at the email address below. Thank you very much, and we look forward to answering all your questions.
The coin you're mining, how much of it is using gas or carbon-based energy, and at what price are you getting it? How many cents a kilowatt hour?
Yeah, we're not mining the Bitcoin yet. That's what we want to start to do. We want to build.
So you're a service provider only right now, because you kind of presented 2 business models. One servicing miners, and then you're going to compete with them when you set up, you're getting power contracts somewhere. You think you can do both of those at the same time?
Yeah, absolutely.
Okay, so what's the answer on the carbon credit thing?
Yeah, well, we want to look at possibly mining off of the flared natural gas stuff. So we've been talking over the last 2 months with a lot of industry experts in the gas fields. And then we don't know much about generator maintenance and things of that nature, but we do know how to mine Bitcoins and maintain and keep those things from going down. And so as we build those partnerships, we're going to explore all that.
So do you know what your cost per kilowatt hour is going to be if you go in that direction? Who's going to pay for the carbon offsets? Because that's the big problem with using gas right now. Everybody's trying to figure out how much more expensive that's going to be versus hydro. You may not be that competitive on the halving.
Yeah, well, we will be competitive on the halving. We, according to the models that I did, and I can share those with whoever wants to see them, we actually went out up to the second halving to see where we would be given certain models. And one of them is like if we only did natural flared gas, where would we be given the 4% increase in difficulty that we aggregate over time that we've seen in the past that I documented. And we think that instead of putting all of our eggs in like flared natural gas, it would be something that we would start a pilot project on with the seed money, and then we could take and find some distressed hydro somewhere. I've actually worked in Bitcoin mines that are on small 1 megawatt or less hydro facilities up in upstate New York and other places. That was the only one I went to, but we're looking at other places like that. And also, on grid is not out of the question. The problem that we're trying to solve is all these miners that we know about in warehouses that people are trying to get us to sell for them and things like that. There's no place to plug them in. So we want to create that in a way that's time effective, such that you don't have to wait till after the halving to start mining. So if someone tells you, hey, today we're going to have a 25 megawatt mine, and we say, hey, we're going to have 5 megawatt mines, by the time the halving happens, you'll be just turning on your nice new mine, maybe after 3 years, to build a substation, unless you had some good luck somewhere. But we'll already have 10 times the Bitcoin you'll have by then. So because of that depreciation that happens within the ecosystem of Bitcoin, with the 4% every month, and how hard it gets, and just my experience seeing how it goes, because I went through this as a miner in the last, in the bear market, and struggled to survive. So I kind of feel like this time is a little different, but it's just kind of bigger. I think we're still going to run into the same problems with a lot of people getting squeezed out. And this approach kind of mitigates that risk, It won't be as good as having 2-cent power down in Texas, but it will be competitive around the 4-cent range. And in some cases, we can maybe get it down below that. So I really don't want to go above 4 cents per.
Nobody does.
Yeah. So
it sounds like the mining piece is an opportunistic business that might get more strategic over time, but your core business today is servicing. And I think of like servicing, like, phone crack service centers for iPhones. You guys are servicing this whole avalanche of mining, servicing, repairs, adds, moves, changes, that whole thing, right? That's the core business, right?
Right. Yeah, right now. And we were originally like, I ran that pro forma out to 2026, and I'm like, okay, we have a $4 or $5 million business at best net. We want to go much bigger than that. And then we were like, hey, what about supporting and operating people's mines? And that kind of goes into that $4 or $5 million range. Well, we're looking to be much like $200, $300 million range in about 5 to 6 years, and that kind of thing. And the only way we can get there is by having this incremental, phased-up approach, where we prepare for the havoc that we know is going to happen and what we think is going to happen after that. We're going to be ready for that. So we want to start building that now in order to capture all the opportunities that are available now that won't be available after that happens.
I think a lot of these public miners will have cost pressure over time. Right now, it's a free-for-all of margin. But do you think they'll engage you guys to run and manage and service their data centers over time? That's a model that you guys have vetted?
Yeah, we've actually done some of that on smaller scales. But it's usually like 1 or 2 weeks here, and then they'll be like, hey, can you stay another month? Or can you bring more people? And it's just like a lot of people trying to flood the space, kind of like a digital gold rush almost. And there's just a lack of experience in people. So we kind of fill in that gap right now, but we don't see that as being sustainable. I think in a year or two, people will catch up to that expertise. But in a year or two, the halving is going to happen, and it's going to be pretty rough on a lot of people. So we're just preparing for that. We think by the time you switch on and anything you start today, we'll have 10 times the Bitcoin on our balance sheet with an ultimate goal of having 1,000 plus Bitcoins in 2026. If we can get that on our balance sheet, then our valuation will be pretty decent.
I think one of the features of Bitcoin mining is that it's mobile. It's easy for miners to relocate. So could you talk a little bit about the ability for your repair centers to relocate?
Let's do about
and
a
be
30-second
mobile.
answer here.
Well, the repair center is in Charleston, South Carolina. That's where we operate it. But the miners, we can move those very, very easily. Some of our clients have like dedicated buildings, but some use containers as well, and those can easily be moved.
Yeah, we have a bunch of people. Actually, our logistics officer is sitting right behind you. He handles all the shipping and receiving, and we just have a streamlined approach to it.
So do you have a geographic restriction on your business?
No.
And is there any specific ASIC-related framework that prevents competitors to enter the space? Any barriers to entry?
As far as people competing with us, I mean, no. I mean, I think personally, I get that question. I don't think there's competition, I'm sorry. I don't think there's competition in the decentralized ecosystem. I mean, the miners are going to come on, hash rate's going to go up. The threat is your difficulty level that goes up, the price of Bitcoin, just basic Bitcoin economics. I mean, if someone competing with us, I'd welcome somebody to mine alongside of me. It doesn't really threaten anything. It's a big picture type of system. That's why I like Bitcoin.
All right.
Thank you guys very much.
Thank you so much. Guardrail mining. Love bringing the ASIC on stage there. All right, that was guardrail mining. Next up, we have distributed charge. Distributed charge. Anybody have a Tesla in the audience? Hey, a lot of Teslas here. So here we go.
Hi, I'm Andy Schroeder, and I'm an independent engineer from Northern Kentucky. I'm working on a project called Distributed Charge, and my title here, creating a Bitcoin Lightning-enabled energy grid. Basically, really simple way to look at this is I want to put a Bitcoin Lightning Network-enabled electricity meter everywhere that there's a traditional meter today. Another, I guess, high-level point about this talk today, I'm very early in my development process here, so today is going to be focused on my progress and my technical developments. And we can maybe talk about business side of things during the Q&A. So how did this project start? Well, actually, I've been looking into selling energy-related stuff with Bitcoin for quite some time. In 2013, I launched the Bitcoin fluid dispenser, which was kind of a demo of a mobile liquid fuel dispensing device, which is basically like a fuel truck that would dispense diesel fuel. This used on-chain payments because Lightning Network didn't exist in 2013. 2014, I revised it to put it into a traditional fuel dispenser cabinet. I added near-field communication, the Bitcoin payment protocol, Bluetooth communication. Bitcoin payment protocol, if anybody's not familiar, is BIP70. BIP70 actually went defunct over time, pretty much. It started becoming obvious that these on-chain payments weren't going to work for retail. Continued to work in the background on, what can I do for the energy industry to facilitate sales? How can I increase Bitcoin adoption? Worked in the background for quite a few years on this, and then electric cars kind of started to become a thing. And I started thinking, well, maybe I should shift this project to electric car charging. So that's kind of where things went. So in 2020, I launched Distributed Charge, which basically was the first proof of concept of Bitcoin micropayments for paying for charging of an electric vehicle. And I implemented that with the Tesla Model 3. So there's a lot of reverse engineering required on the charging system of the Tesla in order to make this work. So there's a payment every 16 seconds, so trust is minimized by both parties involved. The car is continually verifying the energy is delivered before it makes its next payment, and the charging system on the wall there, the charging unit, verifies that payments received before energy is delivered. So this process just keeps on repeating until the charge session ends. The process is fully automated, so you plug the cable in, and communication between the two devices that are in the car for payment and connected to the charging unit, they communicate through the existing charge cable. So it's a really nice user experience once it's set up. You can see here, though, this demo here on the wall for the charge unit. I guess I should be pointing at the sides there where you guys can see it. It's a little bit of a mess, not something somebody would want to actually install in a real charger installation. So this winter, I launched an update to the project. I created a custom board to facilitate all the special stuff required to connect to the charging system, the charge cable of the Tesla Model 3. So there's a charge connector on this product. It's board A0. And I've also been thinking ahead for more general purpose energy grid applications for other types of metering. So there's some additional I/O on this board as well. Board A0, it integrates with something else called the Tofu, which is a special carrier board for the Raspberry Pi Compute Module 4. And here's kind of the Tofu. It's made by another company by the name of Ortec. And I really just want to maybe highlight a little bit about this product here for the whole Bitcoin industry here, because it's actually a pretty sweet form factor for the personal Bitcoin full node, because you can put a M.2 SSD on the thing, and it's a really compact full node, much better than a lot of the Raspberry Pi implementations out there. And it's a kind of drop-in replacement for Raspberry Pi, so all the like Raspberry Blitz, Umbrella, Embassy images can just drop right on this thing and integrate in with the distributed charge project, because you do need to have a Lightning Network node to run distributed charge. So I built my board around this because I wanted to have a common computing platform for the controls as well as the Lightning Network node. You can also put cellular on this thing, which is critical for mobile stuff, which when you have a Bitcoin Lightning-enabled car, it needs to have a cellular connection. So this is board A0 in action. There's a board A0 and the Tofu connected to the wall unit. There's also inside the car. So here's a close-up of that. And this is kind of the user interface inside the car. And you can actually tuck this thing in the corner. There's a nice compartment on this particular car model. So here's kind of a layout of what's going on. So you've got a car. There's a payment module in the car. It's connected to the charging system. The payment module in the car is connected to your home L&D node, which you're probably going to also have maybe Zeus or some other alternate user interface to manage your channels and do other types of payments. The charge controller, which does a lot of the safety stuff for the power hookup for the cable that's plugged in, unplugged to various vehicles, also has board A0 connected. An invoice and pricing structure is communicated through that charged cable, and then the Lightning Network payment is made out through cellular in the car's payment module back to the operator of the charge controller. So what's the update for the spring? Actually, I have the first mini production run of board A0 complete. Looking for beta users of this thing. I actually met a lot of people at the show here that are pretty interested in setting this up at a charger and inside their car. So I'm pretty excited to get somebody else besides myself using this in public. Another thing, I've weatherized the charge station payment module, and I actually have this on display down on the showroom floor along with my car. It's streaming payments live right now while I'm talking in an automated way. So just kind of look at how clean the install is in here. Where's distributed charge headed? Well, I've got this specific charge controller, the Tesla Gen 2 wall connector. That's required to connect with the payment module that I've designed. I want to integrate both of those together so it's a singular product. It can just be dropped on a post in any parking lot where you may have public charging needs. I need to really package those in-car components a little bit more tightly for a better user experience for this thing riding around in the back of your car. There's more testing to be done with other Tesla models, as well as integration with non-Tesla vehicles, and just better infrastructure as far as documentation and maybe some more monitoring of what your charge station is doing. There's board A0 I mentioned. There's some other I/O on this thing that's geared towards some of the more industrial metering. There's other people I hear from that want to use this in data center facilities, which is pretty cool. There's also maybe sub-metering in apartments and rental buildings, campgrounds. The power that you use at campgrounds is not really metered at all. So board A0, it really enables the Bitcoin Lightning Network-enabled energy grid, and I really want to make Bitcoin the native payment method for the grid. This is kind of a schematic of how it could work in a more general purpose application without a car. It's actually a lot easier in this case, but it's not nearly as fun. And board A0, it can actually be used for simpler stuff like vending machines, laundromats. There's other fuels like natural gas, and actually this can be put back into the Bitcoin fluid dispenser that I started this whole thing back on, in 2013, 2014 time. So really just trying to build out the hardware to enable a Bitcoin Lightning Network, infrastructure as far as machine-to-machine interactions. So that's what I got. Any questions? You can scan the QR code to go to my website. I also got a lot of videos on there and some information, and stop down on the floor and check out my system operating. Thanks.
As it relates to Tesla, does the board A0 need to be integrated into the charging infrastructure before it gets to the end user?
You're talking about the charging infrastructure in like a parking lot?
Yeah, or like in your garage.
So in your garage, you're not really going to need this unless you have like a lot of visitors that are always trying to mooch off your power connection. It's basically a modified charging station that you would install in place of another one. So there's dozens of different products out there that people have that they install in parking lots for this type of application, and this would be an alternate version of that. So there would have to be a replacement or retrofit of existing stuff, and I think a replacement would probably be better if you wanted to replace something. There's honestly a huge potential for installation, so it really makes sense just to put in new stuff and leave the other things there until they break and let those archaic systems and their payment schemes just kind of wear out and die off. Electric vehicle charging has a lot of room for growth, and that's why I targeted that first instead of some of the other grid applications, because the users feel a pain point of just tons of different charging networks. They all have a different application they want you to deal with on your phone. They want you to give all kinds of personal information just to maybe even charge up once if you're far away from home. And I want to create a platform where there's a protocol and standard hardware, and any company that wants to put out charging stations can use that same protocol. And even an individual who doesn't want to, have a big installation company involved with management of the hardware, they can still do it. I want something that scales, depending on what type of infrastructure somebody chooses to implement and how they want to operate and manage it.
Are the EVs, including Tesla, okay with you sticking a board into their car?
So my payment module in the Tesla, I have a special wiring harness that disconnects plugs from the existing one, and it plugs in without cutting any wires.
I mean, just the fact that it's there, is that cool with their user agreement?
It's my personal property, that vehicle, so I mean, they can't tell me what I do with my...
If you actually change the protocol inside an EV, Tesla particularly, where do you stand on the warranty or guarantees or any of that? This is a classic problem with OEM products. When you actually plug into a vehicle that has its own protocol and is operating basically on its own, I'm just asking, I don't know. Have you dealt with Tesla on this? Have they seen this thing?
So
or is a lightning bolt going to come and strike you down right now?
We'll see what happens. So a couple things. One, there's plenty of people out in the world that modify their cars. I mean, there's a whole industry of people doing stuff. So I don't think putting an extra component on your car is like a new thing. The second thing, so the communication scheme that I use between the car and the charger is an existing physical communication layer that Tesla already uses for other communication. So I've actually left the charger or the payment module during my drive down here from Kentucky, and I used Tesla's existing network that they have some communication on there, and it did not interfere at all during the entire charging process. I stopped 7 times over a 24-hour period, and it didn't interfere. So my device is actually functioning in a passive way if there's no request for a Bitcoin payment. So you plug in, and a Bitcoin price is offered. If the car doesn't see an offer for a pricing scheme, it just sits there and continues to operate as the car originally was designed to operate.
If you are to scale, who will manufacture and implement the hardware?
So manufacturing scaling can be done in a number of ways. I mean, I could build out my own manufacturing facility. Probably for the initial process, there would be a lot of contracting of different parts of the process. There's different ways to do this. I could sell the hardware to other people who want to do the install. I could also manage the installation process. Right now, I'm really just trying to get a product that is stable and works, and I think that part of it's a little bit down the road for me, and there's a lot of options on how that could be played out. So,
have you had conversations with charging networks in the U.S.?
I haven't really pursued that in depth yet, just because I'm really pretty early in this. I don't have any other testers, so it's kind of hard to really have a strong case for some of those types of organizations, just because they want a more mature product to really consider implementing, I think. So.
Also, last question. Have you considered, I know this is a Bitcoin conference, but have you considered other coins? I'm sure Elon Musk would.
This is a Bitcoin-only project.
Okay.
All right, nice and firm. Thank you. Distributed charge. Great representation for Kentucky on this in this section today. Better than in the second round of the NCAA tournament this year. All right, next up, D2X Group. All right.
Thank you.
Take it away.
All right. Hello, everyone. Really great to be back this year. Last year, we came to the Bitcoin conference to present D2X for the first time to the public, and this year we're back to basically show you how much progress we've made. So let's get started. My name is Theodore Rosenzweig. I'm the CEO and one of the 3 co-founders at D2X. My 2 other co-founders, Don and Laetitia, unfortunately couldn't come. They're stuck in rainy Amsterdam, but they send their regards. So the story behind D2X starts in October 2020. Back then, Don and myself were both equity derivatives traders at a market-making firm in Amsterdam. And Don, being a real crypto enthusiast, comes up to me one day, says, "Hey, Theo, I know you're passionate about derivatives, but you should look at the derivative segment of the digital asset industry. There's something really interesting going on." We started doing some research on the topic, and very early on spot a fantastic business case, initially from a market-making standpoint. So the initial project was for us to basically set up a new trading desk in-house to start quoting and trading derivatives on digital assets. So we raised this project internally. Everyone was very excited. Feedback from management also very positive. But it was really in the practical implementation of the project that we ran into countless hurdles, mainly on the regulatory and operational side of things. At this point, we identified that naturally we weren't the only financial institution in that situation, that there was lots of interest to get exposure to the asset class, but that in practice, institutional adoption in Europe was really slowed down by 3 main issues: the relative lack of liquidity in the space, the operation reputational risks, and the third point, which to us seemed to be the most important, was really the absence of regulated trading venues where, as an institution, you can trade these products. So at this point, having a little bit of an entrepreneurial mindset, Don and I decided to leave the firm and to start basically building this regulated market infrastructure. So a really quick slide on the market opportunity. I'm probably not teaching anyone anything here, but basically, digital asset markets have grown exponentially in recent years, the derivative segment as well. We even surpassed $3 trillion worth of trading volume in a few months last year. But to us, when we did this analysis for the first time, there were 2 really interesting takeaways. The first one is that if you look at derivatives volumes versus spot volumes for this specific asset class, right now they're roughly even. What we know from more traditional and mature asset classes is that derivatives volumes will typically converge to an order of magnitude above spot. That gives us a very good idea of where we're heading. The other really interesting takeaway was really the institutionalization of the asset class, basically facilitated by improving market infrastructure and the positive regulatory outlook in Europe. So what we decided to do was, of course, to look at competition. What are the other exchanges doing? What we identified very early on is that most exchanges have decided to focus on the retail segment, which makes sense because it's an asset class that was and still is very much retail-driven. So basically, that means a sort of gamified experience of trading that's not really in line with institutional expectations. Another observation we've made is that most of the exchanges focus on North America and Asia, and no one really focuses on Europe. So that's exactly where we want to operate. We want to focus on European institutions. So what are we building? Well, we're building the first pan-European regulated derivatives exchange where, as an institution, you will be able to trade futures and options, initially on Bitcoin and Ethereum. Very early on, we spotted a big problem in Europe when it comes to the regulatory framework, and that's really the fragmentation of this regulatory framework, which means that in Europe, the second you touch digital assets, you need a local license in every jurisdiction you want to operate in. So for us, as a Dutch exchange, if we wanted to deal with a French client, for example, we need a license both in the Netherlands and in France. So our approach was to reverse engineer everything to make it work under the European regulatory framework. What we decided to do then is to list derivatives that are cash settled and denominated in euros, which means that in practice, there are actually no digital assets flowing through D2X. So this has two big implications. The first one, we do not have any custodial issues with the digital assets. And the second one is that from a regulatory standpoint, we do not fall under crypto regulation, but only under traditional financial market regulation. This means we're able to apply for a license that will then be able to passport throughout Europe, which means we're able to cover the whole continent. We focus mainly on mitigating the operational risks that I mentioned earlier. So that's really in terms of both the risk management, but also in terms of the tech. So our value proposition relies on three key pillars: risk mitigation, liquidity, and consistency. By consistency, we mainly refer to this term in the technical sense of the word. What we've identified at most crypto-native exchanges is that they will experience lots of downtime as soon as there's a lot of volatility in the market. When you focus on the institutional segment like we do, that's of course a big issue, because as an institution, when there is volatility in the market, that's exactly the time you want to be trading. So we slightly shifted our focus from having just the fastest trading infrastructure to having one that is both fast, but most importantly, reliable. So how do we do these things in practice? Well, we achieve this through three of our unique selling points. First, our pan-European coverage. So we're able to cover the whole continent because, as I was saying, our license is passportable. Second, we're building a superior trading interface, and what we're doing differently is we're basically building our whole infrastructure using Rust as programming language. Rust will present lots of very interesting features in terms of reliability and in particular in terms of the memory efficiency of the code, which is causing most of the downtime you see on these other crypto-native exchanges. The third point, which is actually one of the most important, of course, is really the risk management framework we've developed. So unlike traditional exchanges, where risk management is typically outsourced to a clearinghouse, we've basically decided to internalize risk management within our exchange. So basically, we built a hybrid model that is quite capital efficient, and it's a hybrid between sort of the traditional clearing model you would have with the CCPs, for example, so clearinghouses, and some of the approaches, the innovative approaches you would see on crypto-native exchanges like FTX, for example. This means that we're able to ask for much less collateral, so lower margin requirements for the same positions, while covering for the same amount of counterparty risk. This is also facilitated by the fact that we have longer trading hours than traditional exchanges that are more in line with the underlying asset class. So how do we make money as an exchange? Well, I think the business model of an exchange is actually one of the most straightforward. So we generate revenues from two diversified streams, so we have different clients that will trade derivatives for various use cases, and we monetize market services and information services. So market services, that's really the trading fees that we charge as a percentage of the volume that trades on the exchange. And under information services, you have two subsegments that are very interesting. The first one is the market data. So basically, we generate market data through the trading activities that occur on the exchange. We're able to sell and license this market data, bundle it for analytics, and so on. The other really interesting segment is index licensing. As an exchange, we're also in a position to develop proprietary indices on which we can list derivatives, but we're also able to license these indices to other competitors or other actors in the financial markets. So in terms of the timeline, as I was saying, everything started back in October 2020 with a very small team of two. A few months later, we raised a pre-seed round and came to pitch here for the first time. We basically raised this pre-seed round in order to achieve two things. One was to build a great team for D2X, and also to perform the regulatory analysis that was required for us to submit our license application. A few months later, we raised our second funding round, so that's our seed round, and we're now basically in the testing phase and about to submit our license application to the Dutch regulator in the Netherlands so that we can go live in Q4 of this year. We're lucky to be backed by top European VCs, but also top European strategic investors, two of them being market makers that will provide liquidity on our exchange since day one. So some of you are probably wondering if you're operating in the institutional segment, where's the gray hair and all that? Here it is. So we're lucky to be working with Frédéric Colette as our CEO, who was formerly the head of prime brokerage at Société Générale. Our chief risk officer was formerly head of risk at the London Clearing House, and we're also advised by Alain Courbebès, who designed Optic, which is the latest matching engine developed by one of the large traditional exchange for the more mature asset classes. So our mission is really to bridge this really big gap between the world of traditional finance and this whole new industry, this whole new ecosystem of digital assets, in order to facilitate the institutional adoption of the asset class. In the short term, what this means is we want to be providing the first regulated European gateway for institutions to trade these products. In the midterm, we see D2X become one of the leading market infrastructures in Europe for the asset class. And on the long term, the vision is really to pioneer financial innovation across all geographies, across all asset classes, through also the use of the underlying technology. Thank you very much for your attention, and be more than happy to take any questions.
I have a couple of questions about this. You said that you're avoiding applying for a crypto license or exchange in these jurisdictions, and you're just dealing with euro. What happens in Switzerland, where the Swiss franc, they don't accept euros the same way in institutional trades, or in London with the pound now? Do you have licenses there under those two currencies as well, or are you just doing euro?
The trading on D2X is denominated in euros. What we see is that indeed there are jurisdictions like Switzerland or London which are no longer or are not part of the EU. So they're not our primary focus. Our primary focus is really EU/EEA. So typically countries that use euros are their.
So basically France and Germany.
France, Germany, the Netherlands, Italy, Spain, these are the largest markets.
How big are those markets? I mean, London is the size of all those markets put together.
Actually, the Netherlands surpassed London as a trading hub for several...
for derivatives?
For derivatives, yes. It's the largest market-making hub in Europe now. So for derivatives in particular, it's also a very strategic place for us to operate in. We're still able to cover UK and Swiss clients through an extension of our license. So it's not within the scope of the MTF license we're applying for initially, but it's very easy for us to target them. Similar to how a Swiss company or a British company would trade US dollar denominated derivatives or other products.
There must be a cost. That's what I'm wondering. The second part of my question is, if you're not actually handling their custody of their Bitcoin, let's just use that, writing a derivative on it, is there an additional fee that I don't see as a result of that? Because I'm having to transfer, I'm getting FX charges left and right here, right?
Correct. So there's FX charges. Typically, if you look at the market-making industry, for example, they will trade in different currencies, then they hedge their FX exposure top level. So most financial institutions do have some FX exposure.
And you're not getting a piece of that. They're doing that themselves?
That's actually a very good point, because it's something, a service we can offer and we can monetize, not directly, but through a partnership with the banking partner. So indeed.
So what happens when Binance or FTX gets the actual crypto license for a jurisdiction where they can, they're going after those derivative markets too, but they want to get licensed in all coin? What's going to happen to you?
So we actually operate on a very different segment compared to them. The institutions we want to deal with are institutions that basically look at their P&L in euro terms. So unlike the crypto-native segment where they look at their P&L in Bitcoin, for example, or stablecoin even. So it's a very different segment we target. These exchanges are also not really targeting institutions. They're designed for retail initially. A lot of the features they present make it, to some extent, not really institutional grade. So yeah, in that sense, we have a very different target. And the fact that we also bypass all of the custodial hurdles really makes it a plug-and-play solution for these large banks, these large market makers that are already trading other asset classes.
I might have missed this. Well, what is the timeline for receiving the license? And then are there any risks to the application being rejected?
Sure. So I'll start by answering the second part. There's always a risk. We're extremely confident that we'll receive it. It's basically the hardest part is actually the pre-application phase where you prepare the license application. That's that's a phase that took 9 months for us. The actual application phase takes around 6 months, and basically it's a phase where you interact with the regulator, so you meet with them on a monthly basis to discuss every point, and the way it happens is that they will basically tell you this part is fine, for example, on the governance of your company, risk management, also fine. Here on the tech, we're not really comfortable yet, so can you please get back to us next month with something more up-to-date or developed? And through that process, they basically work hand in hand with us so that we can obtain the license. We've already interacted with the AFM, the Dutch regulator, and they were extremely positive about D2X.
And do you support the physical settlement delivery of the crypto, or are you just pure fiat?
So we're pure fiat, but what we're actually what we're actually working on currently is partnering up with third parties who would basically be able to act as the interface between those institutions who want to use crypto as collateral, for example, and then this partner would extend credit lines in euros. So at D2X, everything is euro denominated, but it doesn't exclude market participants who have digital asset holdings.
I presume that while you're waiting to receive your license, you have ongoing communication with prospective partners of yours who will integrate with the platform. So what is the status of this communication so far, so that as soon as you get the license, they can start trading and interact with each other? What types of institutions have already committed?
Yeah, sure. So as I've quickly shown on the investor and partner slide, we already have 2 market makers that took a stake in the company during the seed round, so they will be our first liquidity providers. Basically, we focus on 2 things. One is getting the liquidity from day one, and the other one is getting order flow. So that's basically how we're going to generate volume from day one. We've been receiving lots of interest from market makers that will be providing this liquidity. So we're not actually marketing D2X yet, but they're reaching out to us because they're in need of these solutions. On the order flow side, basically, we've been talking to lots of brokers, and our go-to-market strategy here is to have partnerships with a few brokers that will redirect their existing order flow onto D2X.
You were here last year and you didn't have your license. You're here again this year, you don't have your license. How long till you get your license? Because I'm beginning to believe that's what's proprietary about this deal, is that license. When are you going to get it?
So we're going to get it in 6 months from now, so end of summer is the target.
Why don't you come back next year and we'll see if you have it.
I'll be back.
Yeah, that's good.
Thank you.
Thanks. All right. That concludes the infrastructure section of Pitch Day and all of the pitches for the day. We're going to take about a 10-minute break here as we allow our judges to get together and select the winners from this section. So in about 10 minutes, we'll begin the kind of presentation of first and second place from each Pitch Day section. So stick around for the next 10 minutes for that, and we can celebrate some winners. And thank you all. Thank you to all the participants. We had 21 great companies and a great set of judges here. So one more round of applause for our judges on the infrastructure section. Pitch Day at Bitcoin 2022. It's time for the grand finale. Yeah. Announcement, presentation of the winners of Pitch Day at Bitcoin 2022. We're going to be doing this by section. First section, our mass adoption section. We've got Greg from XBTO Ventures to present our first and second place.
So, welcome everyone. We have
nice big trophy.
Award. It must be placed in the lobby of the company. That's part of the, that's part of the obligation of winning. Second place. We go backwards or we go first?
Yeah, second place.
Second place, so there's more suspense, you know, because you guys are all wondering what it is. Second place is GoSats, Roshan Aslam. Roshan Aslam with GoSats.
GoSats.
With his rewards program in India.
Hey, come on, hop up.
Yeah, come on
so the prize is actually maybe more rare than these these trophies even. It's the first edition Bitcoin magazine. So
Yeah,
welcome up. Hey, come up and
We're very
get a
interested.
photo.
My firm's interested, so we gotta
pop on
stay
up.
close.
Hey, good stuff.
And then the winner of the adoption category is the Bitcoin Company with
All right.
Ben Price.
The Bitcoin Company.
So we have is someone from the Bitcoin Company here or Ben here? Yeah. Come on up.
All right, Ben.
It's really.
Good stuff. Good stuff.
Fuck
yeah. Congratulations, Ben.
Wow.
Yeah. All right.
Congratulations. Yeah, great energy. Both of them had great pitches, great markets, great vision. It's all about adoption. So, can we take a picture with?
Yeah, for sure.
Here we go. Come on, you guys.
Come there.
Come here, man. Dude. Ready? 1, 2.
All right.
Good job, you guys.
Congratulations to our adoption section winners. Thank you, Greg. Good stuff, guys. Feel free to exit back, too. All right, cool. Probably could use some stairs for next year. All right, our lightning section judges, could you join me on stage? This way? There are stairs in the back. I like it. Hey, get that blood flowing as right before our receptions kick off tonight. All right, love it, love it, love it. Taking the easy route. All right, Tyler, I'll let you take it away to announce second place first and then first place.
All right, our second place winner from the lightning section is Vita.
All right.
Vita?
Hey. Hey, come around this side, actually. Yeah. Don't want any ACLs popped, even though it does get the blood flowing. All right. Congrats.
Congrats. Yeah, appreciate it. Congrats, man.
Good stuff, good stuff. Bitcoin Magazine, first edition.
Nice.
There you go. All right. In first place.
And first place, it was a tough competition, but really amazing pitch and building something really incredible is Albi.
All right. Albi, first place. Lightning section. See him running around the side here. All right, welcome. Thanks. You want to say something? Good stuff, good stuff. Congrats, man. All right, thanks. Maybe go get a photo of everybody real quick. A little selfie for the Twitter. All right, ready?
Squeeze in.
Yeah, that's maybe not a great idea. All right, good job, guys. Winners. Woo! Hey, thanks. And we have stairs. Look at that. All right, third section, infrastructure. If the judges could join me on stage. Thanks, y'all. All right. Really fun section of judges here. Feel free to come on out. Thanks, Bobby, Ria, Tatiana, Mr. Wonderful, and Matt. We have our two winners selected, second place and first place. Who's going to be our second place in the infrastructure section?
Distributed charge.
Distributed charge. All right. If you could join us on stage.
Back in the Tesla.
He's back in the Tesla. It is around here somewhere. Hey, all right. Come on up. Yeah, for sure.
So what we liked about distributed charge is you had a Tesla use case, which we thought was interesting, but we think you've got a much broader opportunity as you do machine-to-machine payments in vending machines, tollways, walking through, a conference doorway. We think that's, you got the bones of something special.
All right. Thanks, Matt. Congratulations.
Some stats for you.
Sweet. All right, in first place of the infrastructure section.
No question. Who's announcing it?
Nunchuk. Nunchuk. It was unanimous.
Nunchuk, unanimous winner. I know they're still around.
There was so much Canadian energy that it was an automatic.
All right, there we go. Nunchuk, congratulations. Good stuff, guys. Thank you both.
Congrats.
Thank you.
Congrats. It is heavy. Biggest trophies I've ever seen. Thank you. That concludes Pitch Day. Really happy.
I just want to say that this is the most inconvenient trophy money can buy. Thank you.
Absolutely.
Thank you. I got you guys a shirt.
Good stuff, guys. The most inconvenient trophy that money can buy for a company that was inconvenient to the Canadian government, apparently. All right, good job, guys. Thanks again to our judges.
Nothing more than feelings.